Hi, good evening. So you people cannot be, mastering the footprint in a single day itself. And for practicing yourself on the footprint, I suggest you to go for the fastbull.com and refer someone, and you can get the footprint chart for free of cost. So I'm using the silver, natural gas, gold, or Nifty as a examples for till some videos to you can also practice it. Okay, so basically footprints are very simple. You have to understand whenever a candle is forming, okay, where the actually most traded volumes are happened, that is called as a value area high and value area low. This is the place where the most volume occurred, and in between one of the place where most traded volume, that is called as a point of control. And another terms you need to understand that here the left side always will be the buy, left side will be the sell transactions, sell traded volumes, and buy side volumes will be on the right side. And color, and what I would like to show you is here. See, if you see, this is the particular example. If you see this candle, okay, for the silver, see these small arrows, whatever you are able to see, this is the value area high and this is the value area low, and in between the point of control. And these are all, left side will be the sell volumes and right side will be the buy volumes. And the color intensity, we see the volumes will be calculated diagonally once the candle opens. Think like that, the candle is opened here, then diagonally it will calculate always from left to right, left to right, left to right. Diagonally it will be calculated. Okay, so do not confuse yourself. I can give you the more examples, but for now you need to understand how it would be. And imbalances, I kept it as a 300%. So because of that, you are able to see here cell balance, because 605 is 300 times more than 300%. Sorry, 300, not 300 times, 300% more than 176. That's the reason imbalance were formed. And here 186, this cell orders 186 is 300% of the 40% of the buy volume. So when buyer, this is the price, but this is all particular price levels, how the sell volume and buy volume is happening. That is what the footprint. Okay, so now come back to the examples. If you see my previous videos, all these explained. This is just like a revision. Now get back into the silver micro futures, which has happened last week. Okay, so you need to take the more volatile scripts to do the trading with the footprints for a better scalping. Okay, so once the silver micro is opened very high, you have to look for that sellers needs to be aggressive, because you need to have a bias. Without having the bias, what is bias means, you need to have an idea. Okay, I'm completely bullish on silver, I'm completely bearish on natural gas. Based on the higher time frame analysis also you can do that. Based on that, you have to decide yourself whether you are going to for a buy or sell. So basically everyone knows that nowadays silver is very volatile, so we have to look for the buy setups, not the sell setups. Okay, buy setups will be the risky, sorry, sell setups will be the risky, and buy setups will be the heaven for us. Okay, so now here if you see, the delta is the value, is the difference between the total buy volumes minus sell volumes. 221 is the total buy volume of this particular candle, sell volume is 291. If you remove the 221 minus 291 minus 70, so sellers are dominant in this particular candle. Like the same way here, 379 is the total buy volume and 1.16k is the total sell volume. Buy volume minus sell volume equal to delta. So it is, this candle also has the sellers dominant. So I usually say that negative delta increasing continuously, it is clearly saying that sellers are dominant. But we have the bias of bull side, so we have to look. And this of each candle where the volume was traded, the point of control is here. This is the white boxes, it will show you usually. So the most volume traded for the three candles is continuously going down. It is clearly telling that sellers are dominant. So delta is, negative delta is increasing, point of control is going down. So it clearly indicating that the sellers are dominant. Okay, and suddenly when it reaching the imbalances of the previously opened candle, these are all stacked imbalances, one imbalance above one imbalance called as a stacked imbalances. So if you see here, this particular candle closed above the point of control of this particular one and above that, and if you see here, delta is positive 374. Okay, so you can enter this particular candle close, or you can wait for one more candle. you know if you're looking for it is a continuous follow-up is there or not. If you see here, delta 374 positive and this is 380, so follow-up is also there, so even you can enter here also. Basically I look further entering this candle itself because this is called as a delta flip, and here you can see the buy imbalance when compared to the 16 cell volume diagonally. 608 is 300% more, that's the reason buy imbalance was happened. So I could see that if you buy here 2 lakh 23,051, and stop loss would be the little bit less of the candle low. If you take like that 2 lakh 23 2, if you see here till the EMA or whatever it may be 843, so 050, so 850 rupees at least you can gain within 3 to 4 candles. So you have to look for the aggression towards the opposite side and suddenly the delta flip. This is the best strategy for you if you do the ultra scalps. So if you go the same way, okay, we will look for that furthermore. See, this is all congestion only leads the further movement. Okay, if you see here, see, -8, -22. This is a sellers are aggressive, and suddenly 205 is the positive delta, and so here also delta flip happened. If you and the candle is closed above the point of control, so this is also leading, above the value area high, so you can take that. And if you see here on the top of the candle, there is no sell volumes, it's clearly saying that bias aggressive. So after the congestion, whenever you see these type of things, we have to look for the traps that only will give you the instant money if you are a scalper. If you are a positional trader, you have to increase the time frame. As of now, I'm using the 5 minutes time frame. See, if you take the trade here, 2 lakh 24,168, the next candle itself 542, so 400 rupees of the profit. Even your stop loss won't hit till some 800 bucks or something. So most of the times 1 is to 5 will be there. And see, after that you are able to see that the sellers entered into the market. Even you can do the reverse analysis and you can participate, but you need to be ultra scalper, means you need to exit very fastly, then you can participate whatever you want. See, here the price is closed below the 9 or 15 EMA. I'm using it and closed below that. So you people think that okay, whether I can sell it or not because of this big wick is here available here, whether I can participate or not. So normal candlesticks you can't find that. But see, if you see here, there is a sell imbalance because diagonally if you calculate, buy volume is 0 and 350 is a sell volume. So it's clearly indicating that 350 is 300% than this one. So that's the reason sell imbalance above the value area high and point of control here. And here delta -17 and here delta -327, which clearly indicating that sellers are aggressive. You can take the sell trade by putting the stop loss here. So if you put the stop loss 2,24,698 and you are entering at 2,24,197, within a single candle itself you are able to earn the 600 points here. And so -17, -327, -855, it's clearly indicating the sellers are aggressive. Just wait, do not enter for a buy side position. If you are looking, see here delta is positive, it's saying that okay, the buyers are started entering, but we do not enter here itself because of the confirmation. And again sellers are dominant with the -903 and again -36, and then the positive delta happened here. So what you are observing in these four candles, point of control is going down stable, and against to that, and candle closed above the value area high and delta is positive, that clearly indicating that buyers are entering, or whoever is shorted, they are planning to exit their trades by buying the contracts. So if you enter here 2,23,491 and see Okay, how much it went till 24 to 70,000 points. You can do the same analysis, and you can observe one more thing, all positive delta only stacking up for each candle. So you can stay the trade till you see a negative delta, but you have to give some room for price to be aggressive. Again here see that minus 186, minus 751, and minus 38, and then minus 28. Here also you can enter the trade, but your stop loss got hit here. So every trade you cannot, but you can earn the money. And see, if you see here, this is called as a perfect delta flip. And here whatever this one is saying, you are able to see here is the order block of the 5 minutes, and which enter the market and reversed. So if you have a bias, so see order block or whatever you may be using, EMS closing below EMS, or uh, closing above the breakout like support and resistance, whatever the way you are doing there, you have to see that how the candle formation only you can see in normal price charts, but here you can see the charts with a delta. The 683 immediately turned into minus 1.67. It is more than two times of the volume entered here. So we can say that this candle is a real aggression, and sell stacked imbalances are happening above the value area high. It's clearly saying that sellers are aggressive, and buy imbalance happened at the top of the red candle, clearly saying that buyers were struck here. So by seeing these two candles from the order block, I can take the entry here. The POC also, see from last three candles, see if you see here, the POC is going down, going down, going down. So this itself clearly telling that sellers are dominant. So you can enter a sell here, and your stop loss would be the above, maybe that the largest stop loss. So you have to wait for some more time for getting a clear confirmation. So this one is the a minus 848. Still sellers are aggressive, but if you see this candle is clearly confirming that whatever this candle formed, and the people may be scared and exited here with the delta negative, but here again delta was risen further, minus 848 to minus 1. Sellers are aggressive, so this candle look perfect setup for you to go for a sell. This is the way you have to analyze the trades. So if you enter here 22,594 to 21,694, 21,292, like this. So this is the way you have to analyze. So if you see here, and again the deceleration of the aggressiveness, minus 1.1 k to 634, 152. Sellers are selling intensity was decreasing, and suddenly the buyer started here, but still the POC not shifted. Only by seeing this 198 you cannot, you need a additional follow up with another candle, because if sellers are aggressive and this was formed, then it's okay. But the selling intensity minus 1.1, minus 634, minus 152, and suddenly change 198, it's not giving the confirmation for us. But if you see this candle 1.28k, it's clearly saying that maybe whoever is sold here, they're buying it back, or maybe fresh buyers are entering. This is the way you have to do the analysis. POC from down to down and up, so POC is up, so it's clearly intensifying. What it is intensifying, that okay, buyers entered, so you can take a buy position here with the stop loss of this one. So if you do like that, what happened here? Okay, see minus 136 if you see this candle. So basically what I will look that, if I entered buy here also, even my stop loss is here, see minus 136 and minus 328 here. So I can clearly visible I'm wrong, so I will exit here itself instead of waiting for the stop loss here. So I have entered around 22 284, and I'm exiting at 21 852, 852 226. So 400 points with the minimal stop loss exiting. That is the benefit of the your footprint strategy. Okay, so if you see here minus 136, 328, and triple eight. Okay, so this is also sellers are aggressive, keep on. Okay, slowly the sellers are entered, and here the buying volume is entered. Okay, you can take the trade, but maybe the double bottom, you people feel that you can take the trade if you want. But I usually how I will trade is I look for the aggression with the more and more 136, 328, triple eight. This is the lesser volumes. We need the higher volumes, more, at least three times, four times. If it is a 136, I'm looking for that at least 1000, and 1000 here and 3000. Like that, the intensify is important for us. So this is the candle why we will avoid. That is the only way. And if you see again minus 385 with the point of control shifted upward and immediately downward. So overall bias, as I said in the starting of the bullish. So if you see here minus 385 minus 1.57 minus 1.25 minus 65, it's clearly what it is telling us. It's clearly telling us that sellers are very aggressive, and suddenly selling activity was depressed by showing the seeing the pin bar, and the POC was down down down. And here, even it is a red candle, the POC, most of the volume is previous candle POC. It's clearly saying that buyers were entering, or maybe short covering is started. So the next candle with the 512. So what you're able to see here, intensified 65 to 512. It is minus 65 to 512. It's nearly 10 times of the volume entered here. So you can enter this candle close 2045 with the stop loss of 191431. If you enter like that, see, till the EMA, your maybe or negative delta here is your exit. It is nearly 1 is to 6 times of your profit. 1 point is risk, think like that, you are getting the 6 points. So this is the way you have to analyze the footprints. I will come up with the more videos in the future, but this is just an introduction. After you reading the book, you will understand better, and it is better for the volatile markets and better for your trades when you're using with your bias, whether you buy or sell. Okay, so you have to do the analysis on daily time frame, weekly time frame, the same way, and you have to find the stock or levels or something, and with your levels do the trades with the lesser time frames. Thank you.